All right, welcome back everyone to Invest the Rest, my new YouTube channel that covers multiple different types of investment strategies and compares them against one another. If you've been following my channel up until this point, you'll know that I started three $10,000 accounts at the beginning of 2025, all focused on different and very specific financial and investment strategies. Today, in this video, we're going to cover the account that is focused primarily on harvesting the contract premium from selling put and call option contracts. These put contracts and call contracts have been sold on a select few funds, including MSTY, MSTU, and more recently, TSLL. Now, before I get into the update for week 5, week 6, we had 4 contracts that closed February 14th, which was today, Friday. This is not financial advice, right? As I always say, I am not a financial advisor, and these videos are really just capturing my financial journey. I always expect everybody to do your own research before investing your own money. My videos are made for entertainment purposes only, but I do hope they shed light on some of these more complex investment strategies. So jumping into it, let's take a look at the 4 contracts that expired today. All 4 of them expired on February 14th. 2 of them were open on TSLL, and 2 of them were open on MSTU. I'm going to zoom in here just a little bit. They were all put contracts. 2 of them were opened later in week 5. 2 of them were opened early in week 6. Week 6 being just this past week. I'm going to cover the TSLL contracts first. I had a TSLL put contract that I sold February 6th that I received $56.33 in premium. That was at a strike price of $20 and expired today. Additionally, I opened a TSLL put contract, or sold that TSLL put contract, sold an additional one on Monday, February 10th. TSLL took a dip in the beginning of the week, as did most of the stock market, and I was able to get a decent amount of premium, $23.33 after fees, at a strike price of $18. Now, very tumultuous week. I thought for a little while there that both all of my TSLL and all of my MSTU put contracts were going to get assigned this Friday as the stock market continued to drop. I believe both TSLL and MSTU dropped under at least one, if not both, of the strike prices that I had contracts on. Now, Thursday, Friday, later in the week, the stock market started to recover. TSLL continued to the upside, as did MSTU. And fortunately for me and the goals and the strategies of this account, none of the contracts got assigned. So what does that mean? That means that TSLL closed above $20 at market close today. It closed at $20.23. That means that the buyer of my 2 contracts could force me to buy 100 shares of TSLL at 20, my strike price, or 18, my second strike price. But that wouldn't make sense, because if they had 100 shares of TSLL, they would obviously sell it on the open market at $20.23 and make more than if they sold it to me. So what we can do here is we come over into this column where it says TBD. We know that those 2 contracts expired worthless. Now, one thing that I want to mention before I update this column and column N, which will change this value up here about my total assigned and total exposure. I talked about earlier in regards to this account that I wanted to leave a little bit of wiggle room in the account. Well, I did see an opportunity this week, February 11th, 2025, obviously, right, for MSTY. Now, we haven't traded MSTY since week 1, okay? Week 6, MSTY had a dividend coming out. They announced this past Wednesday. I bought it Tuesday, knowing that MSTY was going to dip after the dividend was paid, but would most likely recover by my expiration date of 2/21. Now, I'll cover this trade in a little bit more depth later in the video, but what this trade forced was my total assignment and my total exposure was $10,400. Okay, my account balance was only at $11,000, and that's with the premium received from the MSTY trade. So I got really close. If we subtract that $94.33, the account was right around $10,900, and I had spent $10,400 of the current available balance in the account. So I did get very close, but I felt confident in my trades, and I want to continue working towards my $650 or recently raised $700 per month goal. So what I'm going to do over here, now that we covered how close I got on my exposure, that is going to change as of today, because this contract and this contract for TSLL both expired worthless. Okay, so I'm going to mark those in green, and you'll see instantly, because those two contracts expired worthless, I did not have to buy TSLL at the strike prices that I sold the contract for. My current exposure is down to 6,600. Now, let's cover the contracts for MSTU. I also had two put contracts sold on MSTU. One was sold on February 7th. One was sold on February 11th. I received $39.33 for the first one and $19.33 for the second one. MSTU was more stable than TSLL, in my opinion, over the past week. And so I was able to open both contracts 4 days apart at the same strike price, $8.50. Again, fortunate for me, fortunate for the account, and in line with the strategy. MSTU closed at $9.15. Excuse me. So again, the seller of the 100 shares that bought my contract can take their 100 shares and sell it on the market for $9.15. Obviously, they're not going to force me to buy it at $8.50 because they would lose money versus what they can get for it on the open market. So once again, both MSTU contracts expired worthless. That means we keep all of the premium and we don't have to take any action. We don't have to sell our shares if it was a call contract, and we don't have to buy the shares if it was a put contract, which in this case, all 4 contracts that expired today were all put contracts. Now, like I said, I did open an additional late week, or I'll say early week, on Tuesday, an early week contract, a put contract. Again, I sold a put contract on MSTY, 100 shares, got a very respectable, in my opinion, premium, $94.33. Now, when I opened this contract and I sold this put option, MSTU was not at $25.45, right? It was higher than that. It was up near, I believe, $27.50. And I said, well, I will buy MSTY between now and 2/21 for $26. Now, I bought that, and I knew MSTY. I bought it on Tuesday. On Wednesday, MSTY paid their monthly dividend. I knew that it would drop from $27.50 down based on the premium, the monthly dividend premium that they paid. So MSTY came out with about a $2.10 dividend that they paid, and thus the stock dropped by about $2.10. So it went from $27.50 to $25.50. My strike was at 26. Now, one thing to keep in mind with options, the buyer of my contract, of this put contract, can exercise it at any time. So between the date that I open the contract and the expiration date, which is February 21st. So there is a chance that we get assigned early. And what that means is the buyer would execute the contract and force me to buy 100 shares of MSTY at $26. And the reason they would do that is because the current price is $25.45. So they could get an extra 55 cents per share, right? Times 100, which would be $55 for selling their 100 shares of MSTY. So early assignment is a possibility, but I'm also okay owning 100 shares of MSTY at a $26 price. I think $26 price for MSTY is a very good price. And if you'll notice from week 1, that's also the strike that I opened for a put contract on MSTY way back on January 6th. So I think there's a lot of support for MSTY at the $26 price. It has been as high as 33, 34, or even higher. And even if I get assigned, I think selling a call in week 7 will easily be able to sell a call for higher or the same price rather that I buy at. So if I buy at $26 a share this week because I get assigned early, I will open a call in week 7 for MSTY to sell those shares at the same strike price and retain additional premium. So right now we got $95 or $94.33 after fees. That brings our February total up to $266.98, or a grand total for the entire year, we're not even through 2 months yet, of $1,026.25. Now, additionally, by marking all of the 4 contracts, 2 of TSLL and 2 of MSTU, marking those as expired worthless, my exposure has dropped to $4,900, and I can go as high as $11,000. So next week, opening contracts, next week is a shortened week because of the holiday, but opening contracts, I have right around $6,000 to play with in exposure to open additional contracts on TSLL, MSTU, and possibly a call contract for MSTY if that put contract gets assigned early. There's no saying if it will or it won't. I'll only know once it happens. So very optimistic. We still own 200 shares of MSTU at our $11 and $12 strike price, which averages to $11.50 for 200 shares. As MSTU continues to climb, which I hope it does next week, I will try my hardest to open call contracts at $11.50 on MSTU, sell those contracts, get that premium. And you know what? We already own the shares, so if they get called away or they don't, it doesn't matter to me. If they don't get called away because MSTU doesn't get back up to that $11.50 price, I'll open a call the following week. I'll open a call the week after that, and I'll continue to harvest that premium until those shares do get called away. Once those shares do get called away, we'll continue to sell puts and lower our cost basis for any of the stocks, whether it's MSTU, TSLL, or MSTY. Again, when I own the shares, right, such as MSTU, I am only going to open put contracts lower than my average cost basis, so of my shares that are owned. So right now it's at $11.50, and so I will not sell a put contract higher than $11.50, and actually I will open it as low as possible so I can bring my average cost basis down. That will make selling calls in later weeks even easier the lower that cost basis is. So at that over $1,000 so far, started with $10,000 in the account. We're over $1,000. We're $300, $267 towards our $650 per month goal, or $700 per month goal for February. I believe we have 2 more full trading weeks in February, so we really got to hit it hard in week 7 and week 8. Make some very strong trades, get some good amount of premium, and hit that $700 goal. If I go over to the summary tab real quick, you will see the options account is still the front runner of the three $10,000 accounts that were started at the beginning of 2025. The market increased Thursday, Friday, and the dividend account is very close on our heels in the options account. So the dividend account increased to $803. I'll be putting a new video out on that account later this weekend. New dividends were announced on Wednesday. So the dividend account got an inrush of cash flow based on the ETFs that it holds. It got paid a significant amount of dividends. So it was able to catch up to the options account. The growth account, 375, still going strong. By design, it would be the safest investment. So you would expect lower or more modest returns. But it's still making almost half what the high risk dividend account is making. And, I would say as far as risk goes, the growth account is the lowest. Dividend account is in the middle to upper, and the option account is the riskiest of them all. The dividend account and the growth account are also more passive accounts, right? The option account, I have to look at trades or opportunities to make trades pretty much every trading day, where the dividend account and the growth account tend to sit there and continue to grow. So if you're interested in seeing an update on those two, keep your eye on the channel. Like I always say, if you found this information valuable, interesting, educational, or just entertaining, you're not interested in investing, but you like to watch other people's journey, subscribe down below. You'll be notified of new videos when they are released. And throw me a like, or if you have a question or a comment about my strategy, or maybe possible new strategies, drop a comment. I respond to all the comments on my video. And as always, everybody, thank you so much for watching. I'll catch you on the next one.